What's up, everybody? Michael Silva here to do some technical analysis on the financial markets. I do these market briefs Monday through Friday, every trading day throughout the week. We take a big macro scope look at the charts, and then we kind of hone in to a little closer of a view as well. I want to say thank you to all the people and the recent subscribers coming into my channel. Thank you for smashing that like button. Thank you for subscribing. I really appreciate it. It's helping my channel grow and reach more people. If it is your first time here, or if you don't know already, in the description below, I post links to every single chart that we are going to be discussing in today's video. Without further ado, let's go ahead and hop into today's show. All right, welcome back. We're over here looking at the SP 500 Index on the weekly time frame. Now, what took place today? The big news today was around the Apple event. A lot of eyes were on the tech stocks. Post a little screenshot right here. As soon as the Apple event really took place, the stock didn't react all too well to the news that was going on. We saw that pullback intermediately. That's on the 30-minute time frame. Doesn't necessarily mean that the stock's just going to keep on falling over. As you can see here on the 4-hour time frame, it's a falling wedge pattern, so we very well might see a breakout. It looks very similar to what we discussed yesterday on the S&P 500 and on the NASDAQ 30-minute charts as well, and we did see the breakout of those two charts. Here on the weekly time frame for the S&P 500, just want to point out that we recaptured the 5 EMA on the weekly time frame, still holding strong above this trend line. Things are looking pretty decent right here as of right now. Still though, a couple weeks back, we had this dark cloud variation, which is a topping pattern or a reversal type candlestick pattern. Monitoring it every week. We'll come back as time progresses. Here's the daily time frame for the S&P 500 as well. Completely recaptured the 5 EMA indecision type looking candle, kind of consolidating sideways here in this beer flag formation. So if we get a breakout here, let me zoom in on a closer time frame here actually. There we go. It's a little bit easier to see this way. So if we break out here of this 34.25, that can easily send this stock higher. We have that upper resistance right here, and then we are sitting at all these levels of support. So we have the 50 period moving average. We just reclaimed the 5 EMA. Things are looking so far so good. And then when we hop into the 30-minute time frame, we broke out of that bull flag pattern that we discussed. I happened to catch that trade. Nice little trade. Only had one contract, but made about 50% on that contract. So not too bad of return on the capital invested. Here's the 30-minute time frame for the S&P 500. This was the bull flag we discussed yesterday and the falling wedge as well. We had the positive divergences. We saw the breakout of the bull flag. Very strong start to the day, but really it just kind of tracked sideways up until the point where the Apple event took place, and then we started seeing the markets kind of roll themselves over. Is that temporary? It might be. It might not be. So we're going to have to see where the futures market takes us and kind of plan it out. But what we do know is the longer term target of this falling wedge breakout, we put at 34.70. So if the bulls can claim that level, that is going to be some really good news for them. As far as resistance going into tomorrow, we did happen to capture the 3,400 level. So that's good. It's a psychological level. However, just above 3,400 right here, this red line, which is right above the 30-minute hammer candle that formed. So we pulled back, formed a hammer candle. I would be basically watching here to see, first off, where the market opens, because we have two areas of resistance that I'm going to be keeping an eye on going into tomorrow. We have the first level here, just call it 34.05, and that's not far from it. So we very well just might get a gap above. But if we close below, if we open up below tomorrow, then keep an eye on this 34.05 because it will act as resistance. You can look in the history of the chart, draw a horizontal line across, and you can see clearly resistance before consolidating, and then we broke above it. Okay, and then the next level was today's level at 34.20. What can take place is we can see a gap even above here tomorrow, and then we might see a pullback to 34.20, which would be a good risk versus reward trade where you'd want to then have a tight stop loss and go from that point. And as far as this here, if we have a gap down tomorrow or if we open up within this channel, you're just going to kind of monitor these two areas. Now, if we gap into this channel, this bottom line should act as an area of support. If we start breaking down that level, the next level of support is really going to be kind of this zone of 3,385 up to about 3,390. So this little $5 pocket range right in there. My overall target, if everything keeps continuing, is going to be 34.70 for this falling wedge bull flags breakout right over here. So even despite the small pullback, still everything looks somewhat healthy. We'll see what takes place tomorrow. Now, as I previously stated in this video and the other videos, there's a lot of things going on. So we're the FOMC meeting, right? So that we don't know what's to come from that yet, and there could be a curveball. And then we had the Apple event today, and it didn't really do much. And then we have quad witching, and then also tomorrow the VIX futures expire as well. So just a lot of stuff to consider. If you don't have experience trading the markets during times like these, I'd probably just hold off to see what takes place, and then we could kind of make moves after that. Because if you're on the wrong side of the trade and there's something bad that does take place, it's not the greatest thing, clearly. But if you're on the right side of the trade, things can go very well. Now, things are looking overall bullish so far, but there are some bearish things. On the daily time frame, we saw the bear flag. Right here, we see the breakout of the falling wedge and the bull flag. What I'm seeing in the VIX is a cause for concern. So here's the VIX. We have the gap still below that has yet to be filled. Formed a little bit of a hammer candle today, right on the 50-period moving average. Another falling wedge type pattern. And when we have falling wedges, as previously stated, we sometimes see big aggressive moves to the upside, but this doesn't do justice. Let me bring you into a closer time frame. Here's the 30-minute time frame for the VIX, and as you can see, scoping in on the 30-minute time frame, you can really see this falling wedge pattern, kind of how it's playing out. And really for the last 2 days, what's been happening? Well, we're just seeing it kind of just go sideways. So we don't know what's taking place. The last time it went sideways on this chart was right here before a massive blow off, basically a big old pull, and then we started heading down from that point. So are we seeing something similar happen? Maybe, but the difference between then and now, you can look at the moving averages. One, we're below the moving averages here, the 200 and the 50, and the 50 is kind of crossing down through the 200. And then over here, the price action was actually above the 50 and above the 200 as well. Now, the price action's been going sideways, but if you look at the MACD and the RSI, both of them are giving us a positive divergence on a bullish type pattern. So I don't know. It's like I said, we have a lot of things taking place this week, and the VIX, we got to keep a close eye on, because if we start getting a uptick in volatility or breaking out of this pattern, it can very well send the VIX higher. Here is the NYMO, and wow, look at what's taking place. We saw a big uptick today in the NYMO, still a negative breath in the market. However, what we were saying was, I can see that this can go above zero and then push the market higher, and that could be potentially a good opportunity if we get back up to this upper trend line to start maybe possibly putting into a short position. As of right this moment, shorting is dangerous, especially during times like these. However, if we can find good risk versus reward trades, then I'm all for it. But as of right now, still shorting this market is just I just don't see anything really sticking out. But when I do, I'll be sure to talk about it here. Here's the NASDAQ on the daily. Now we broke through this trend line, so there's going to be that resistance up ahead. We recaptured the 5 EMA, and we're still above the 50, so things are looking decent right here. We might go get a retest of this trend line and then potentially either get rejected, but or potentially even go higher from that. Now we just got to monitor this one, like I said, day by day, but it's a good thing for the bulls to recapture this 5 EMA, because sometimes the trend shifts and changes. Now, once again, very similar to the SPX on the daily, it looks like a bear flag. So this could just be very well trading within this channel till further notice. We'll find out. This is the important chart that everybody should be watching and paying attention to, the US dollar. The US dollar starts going up, we very well might start seeing pressure on assets such as gold and silver, and also the SP 500. If we start seeing it go up, we might see those index start to roll over. Now, it broke out of this down channel, but it has been struggling to go anywhere from that point. It looks kind of like a bull flag, overall bearish context though. So we ran up, now we're consolidating sideways for potentially a move to the upside. I'm not going to be convinced until we see a break above 94 and a close there to really understand that this move can have some legs and we can go higher. Positive divergence in the RSI, positive in the MACD. Keep a close eye on this. Today's low did drop below 93, which is pretty bearish. We hit as low as 92.86, but we didn't close there. We saw a little bit of a bounce, hanging on by a thread. We're at the 93.06 handle. It's going to be interesting to see how this one plays out. Gold on the daily time frame played peekaboo on this upper trend line, kind of coming out for just to see what's going on out there, and then it came back in within the channel. Look at, and if the US dollar gets more pressure to the downside, I can see this start to break out. But we got to make sure that it's a real, true breakout. So we're going to have to give it a day to close there above that trend line, and we need to see it with some good volume. And I would really like to see it more on a weekly time frame, also close above there and hold. So if we get a break above, maybe a retest, and then we start moving higher. If we start breaking above the previous all-time high, this 2080 level over here, and getting close above that, that could definitely give us that next umph and move that we saw recently here in mid-July to start moving the price of gold higher. We'll find out. The FOMC is talking, and I'm sure that's going to have a big effect on the markets all around. Hi-ho, silver over here, still within the consolidation period, not giving us much. Nothing to report. We're waiting for either a breakdown or a breakout. The 50 period still sloping up because the price action is still here. It's below this lower trend line, and gold's 50 period moving average is already within this. Gold has hit an all-time high. Silver has a long way to go to reach its all-time high. Going to be interesting to see how this one plays out. I'm bullish silver. I'm bullish gold long term. Here's Bitcoin on the weekly time frame. I typically show you the daily, but I want to show you the weekly before I get into the daily, because what we saw here was this big red pull to the downside, and then we had a bear flag on the daily. We broke above it. We're starting to see movement to the upside. We said 11.2 was an area of resistance. Right now it's at 10.866, so we're starting to see this move higher. This very well might be a dead cat bounce on the weekly time frame if we can't hold that 11.2 level. So we're going to monitor it, and if we start seeing that dead cat bounce, this pink box over here is that zone of support to keep an eye on. Here's Bitcoin on the daily time frame. This was the area of resistance, the bear flag pattern. And once a very strong area of resistance is broken, that's when you could see these upward thrusts. And what we're seeing is a continuation of that movement. Very nice move these last couple of days for the price of Bitcoin. Still below the 50 period moving average, and it's still about to run into this area of resistance at 11.2. If we can recapture that area, it should act as a strong support. But as of right now, that's the resistance that you want to watch out for. MACD did cross over well below zero, but that's, a good sign at least to start off with. Last but not least, we have the 10-year Treasury bonds. Now, there's a lot of talk about yield curve control, and just recently the New York Fed posted an article about the 1940s when it came to yield curve control. And I'm going to see if I can find that article and post it in the description below. It's a good piece of history written by one of the people that work there. So I would highly encourage you to just take a look at it and kind of understand what that really means. We've been locked and loaded within this 0.6 to 0.7 range. My short-term belief is that we can see a squeeze to the upside. Given the context of the chart, we broke out of this green trend line. We have positive divergence in the MACD and the RSI. So there's bullish technical things. However, there's also the Federal Reserve discussing and talking about various different tools that they have. And then I just found it interesting that the article just came out about yield curve control. So we will see what takes place. That's all I have for you on today's market brief. Wanted to keep it short, to the point, sweet. If you don't follow me on Instagram, follow me there. If you don't follow me on Twitter, follow me there. I try to post intraday to talk more about the markets. I haven't been posting much on Instagram, but I do plan on starting to increase the amount of tweets and stories that I post. So thank you guys, and we'll see you back tomorrow.